and welcome to our Chapter 7 tutoring video for Principles of Accounting 1. Today we're going to be, like I said, talking about Chapter 7, which is dealing with fraud and internal control. Okay, so I'm assuming you've already read the chapter before you clicked on this, so make sure you do that. This chapter is really dealing with steps that a business can take to make sure that they have certain steps concerning employees and things like that, so there's honesty in the company and it limits fraud. Okay, so I want you to make sure that you understand page 338 at the bottom. It says internal control activities, and from pages on it talks about which each one of those are. You need to know all of those, okay? So the first one's establishment of responsibility, okay? So that means you have an employee and they need to understand what their job is and what's entailed in that, okay? The second is segregation of duties. That is if I'm an accountant for a company, okay, and I'm the only person that has anything to do with the books. If there's only one person working on one job and no one's there checking their work, it's very likely that they could do something involving fraud. So I could very easily never take a vacation, and I could just do what I want, and I could be taking away money from a company, which no one wants to do that. Okay, so you have to make sure you segregate duties so there's not just one person on one responsibility. Documentation procedures. This thing is kind of what we're going to talk about. We're going to talk about petty cash in a few minutes. Documentation, that's more like receipts and vouchers and who signed for a certain item. If something expensive was coming in for UPS, who signed for it, and things of that nature. Physical controls. Physical controls can refer to alarm systems or locks and cameras and stuff like that. Independent internal verification, that is where inside of the company, like I said, there are people that are checking on work. So a supervisor will go and check my work, for example, or something of that sort. And then human resource controls. So those are certain steps that can be taken by an HR manager in hiring. They can do the proper background checks and things of that nature. So the main idea for a problem for Chapter 7 is dealing with petty cash. So petty cash is an idea that a company could have a little lockbox, okay, that has some cash in it. And this would be for certain things. Let's say that I'm a secretary for a company, okay, and UPS comes in and they say, okay, you owe us $5 for what we're about to give you, okay. For some reason I have to pay for shipping, okay, if they're picking something up. At that point, a business doesn't have time to go get someone to run to the bank to get $5 out of the account to bring it back and give to the shipping company. So petty cash is kind of an idea that there's a little box, okay, and if you have to take money out, you take your money out, and then you put receipts in, okay. So in the idealistic world, okay, at the beginning of the month, if you have $100 in your petty cash box, okay, at the end of the month, you would assume that there should either be $100 worth of receipts or an equal balance between how much money you have in receipts and how much is left in the box, okay? So sometimes that doesn't happen, okay? So it's easy to lose a dime or a penny. They're very tiny, you know, and people make mistakes, okay? So what we're going to be dealing with here is kind of how to journalize transactions for a petty cash box, okay? So for this, we're going to be doing exercise 715. Okay, and exercise 715 is on page 378 and 379. And what we're kind of just going to do is go through the problem, and then I'll show you what the answer should look like, okay? So on October 1st, it says a petty cash fund is established with a check for $150 issued to the petty cash custodian, okay? So a petty cash custodian, if you're wondering what that is, that's the person that is in charge of the petty cash box, okay? And you would assume that for that job, just talking about internal control, you would only want one person in charge of that, so there's no pointing, he said, she said business, okay? So a petty cash fund is established, okay? So they are increasing petty cash, okay? And petty cash is an asset, okay? So if you're putting cash into a petty cash box, that means you're getting cash from something else, okay? So what will happen is a company will go and they will write a check, okay, to petty cash, and they'll put it in the fund. So for that journal entry, it should look something like that. Okay? So now on the 31st, this one's a little bit more entailed, okay? So we're going to go over what this is kind of doing, okay? So for October 31st, it says a check was written to reimburse the fund and increase the fund to $200. Account of the petty cash fund disclosed the following items, okay? So what they're saying is they have currency and cash of $59.70, okay? So ideally, we started with $150, okay? So now we're looking at our receipts, okay? So we started on October 1st, now it's the end of the month, and we want to make sure that our receipts and what's left in the box equal $150, okay? And then it also says that eventually we're going to increase it to $200, so we'll do that step last, okay? So it also says expenditure receipts, vouchers, are supplies, telephone, internet, and fax, postage, and freight out, okay? So all of those things are going to translate into receipts, okay? That's what it says. They're going to also kind of translate into some expenses, okay? So what you're going to do for this is all of your receipts, okay, are going to be a debit, okay? And you're just going to add all of those up, okay? So I have the answer here, but I'm going to show you all that in a second, okay? So we have to also assume, okay, we added all of those up. Like I said, in an idealistic world, those would equal, okay? But in most of these problems, and probably in real life, that doesn't happen, okay? So there's another account called cash over and short, okay? And I'm a bank teller also. I work during the summers, and I work as a bank teller. And we balance every day at 3 o'clock, okay? So what happens at 3 o'clock is my computer says I should have this amount of money, and then I have to go through and physically count every single bill and every single coin that I have in my possession, okay? And every once in a while, you might be a penny off or a nickel off or something like that. So you have to file in your cash over and short. So you have to document that what your cash was, whether it was over or under, you know, a penny or something like that, you have to show that, okay? And it might just be on the floor somewhere hiding from you, okay? So whether or not you have a debit or a credit of cash over and short depends on whether you're over or under, okay? So if you debit cash over and short, okay, that means that you have less receipts than you should of cash, okay? And if you credit cash over and short, that means you have more, let's see here. Yes, that means that your receipts were more than your actual cash, okay? So in this problem, okay, when you add all of those up, the cash over and short debit is $1.30, okay? So what that's saying is your receipts are $1.30 short, okay? Easy enough, okay? So let's assume that's a debit, okay? So let's think if that was a credit, okay? So if we had a cash over and short credit, that would mean that your receipts were over $1.30, okay? So for this one, I'm going to hold this up for a while, and feel free to pause the frame to look at it. But you would look at this, and also I'll explain in just a second what this petty cash of $50 means, okay? So you can look at that for a moment. Okay, and continuing on, it said a check was written to reimburse the fund to $200, okay? So if we started with $150, okay, and you want to increase it to $200, you have to add 50, okay? So just like here where we debited petty cash, we're going to debit it again, okay? Now, you'll notice that your cash is $200 minus your $59.70, okay? So that's the amount of cash that you're actually going to go take out of the bank, okay? That's the actual amount of cash that you've used, okay? So that's chapter 7. I hope that was helpful, and remember, look at that page, the 338, for all of your internal control, and this chapter is really important that you read and kind of get a good understanding of what's going on. So I hope that was helpful, and that's internal control.